Good morning, everyone. JR with Secure Metals. Time for another precious metals technical analysis update. Today is the 6th day of June. It is 11:35 a.m. Eastern Standard Time. I'm going to try to make this video under 15 minutes. I have a lot to cover. I'm going to do gold charts, silver, palladium, platinum, Dow Jones, US dollar, ratios between gold and Dow, and ratios between gold and silver. I have another research video coming out here, coming soon to a theater near you. But for now, let's do this technical. Again, a lot to cover, so I'm going to try to make this as fast as possible. Okay. So currently still testing this 70% range here on the Fibonacci retracement level. Your 61% level here for Fibonacci is 1260. So it looks like we're trying to target this 1260 range. All right. So this is your 4-hour chart. I'm not going to consider this chart bullish until we can break above this level here, the 1268. Anytime you want to measure a trend, whether it's going down or up, you want to see if it's broken some levels of support or resistance. So in this case, before we say that this is going to be in a bull market, obviously this is in a short-term bear market. As we can see, we're creating new levels of resistance, levels of selling, right? So as of now, anytime we touch this line, 1257 has been pushing us down. We had a good bullish momentum candle yesterday when the ECB came out with its news. The European Central Bank is going to continue to print heavily, and they're also reducing interest rates. So extremely aggressive here for the ECB. I actually expected the metals to go down because with that news, that meant that a lot of people were going to sell a lot of euros and buy a lot of US dollars, and that's exactly what ended up happening. But this is the great thing about this market, that nothing makes sense, right? So they announced that they're going to print, they're going to keep interest rates low, bring them down even further. And what ended up happening was when the news came out, the euro was trading in the mid 136 range. We went from 136.5 all the way down to 135. Within an hour, we were all the way back to creating newer highs. So these are the levels of resistance right here, these two green dots, these two green levels. So the euro is still on bearish territory until it surpasses this level here, at least 137.35. But very strange how that news came out. The market came down, basically 150 pips came down, and then it ended up going right back up. Pretty insane market. But that's what happens when you trade news. That's why you don't want to trade news, because sometimes this thing doesn't make any sense. But again, you're printing money left and right, and people are going to buy the euro. Yeah, right. That makes a lot of sense. So let's go back to the gold chart here. So yesterday, again, I actually expected the gold market to go down simply because so many people were buying dollars, but apparently they sold all the dollars after they sold all the all the euros. So we just had a big move to the upside. So gold had a really nice bullish engulfing candle where this candle engulfed every other candle prior. That's fairly positive. And now we're trading flat. A little outside day candle, an outside candle. It's basically when the highs and lows are higher and lower than the previous days. This is an outside day. Depending on how this finishes, if it finishes off green, then it might be a little bit bullish and we might be able to break this level of resistance. If it comes out red, if it finishes the day red, then it might be a bearish outside day and we might see new lows, maybe to 1234 range. That's the next level of support, right? Stochastics are on the daily chart starting to rise. Okay, and with this bullish engulfing candle here that we have for the daily chart as well, again, it does look like we're targeting at least 1260, possibly a bit higher. But again, 1267 is the number I want to see before I can say that this is short-term bullish. Okay, as of now, we're still flirting with the 61% Fib level here and the 76% Fib level around here, right? Stochastics are going up. And let's look at the daily. So I do expect a little bit of a rise, but again, let's see what happens within the next day or two. Weekly chart. Stochastics are a little bit oversold, still pointing down, so we still have a little bit more room to go. If you're looking at this chart, it actually looks like we will be testing this area here at around 1230, 1234. That's the level you want to look out for, okay? Bollinger Bands are flat, 20-day moving average is flat, 50-day moving average is flat on the weekly. So again, still room for more sideways consolidation, right? Let's look at silver. I think I took a little too long on that one, so I try to make this one quicker. All right, this is your level of buying for silver. Okay, this is your low of this is your 2013 low, roughly at around 1820. If you fall below this level here at 1860, you're most likely going to test this 1820 level. Okay, stochastics are still flat. Down here at the bottom, so it's still a little bit oversold, but not necessarily pointing up, still fairly flat. So again, we could see more sideways consolidation. Big for silver. This line, this dreaded line that's been holding silver down for almost 3 years now, here from April 25th, 2011, all the way till now. This line continues to hold us down. This line, a break above this line, I would bet that we are back in bullish mode, and we might just continue to see newer highs, because again, this is a big line to break. If this line breaks, you should see a big break and a big pop to the high end here. Okay, so you'd look to test the 21.5 level before trying to take out these other levels and possibly target this 100-day moving average at around $24. So again, guys, keep in mind, this is an extremely important level here around the 18.5 range. Extremely important, and a break above this line, which is roughly at around 1950, could be probably the deciding factor if this is going to go higher this year, or if it's probably going to continue to trade sideways till the end of this year and maybe break this line some other time, maybe later part of this year or maybe early next year. But again, we want this to break. We want this line to break, because this line has really been a pain in everyone's neck. And as you can see here, when we broke above this line, again, you had a big rally to the high end, and that's what you want to do here. We want to break this line, and we want to rally. We want a serious rally to come together. And silver's been very quiet, so I do expect a rally, and I am favoring the upside, okay? Let's do platinum. This is platinum. Okay, so stochastics on platinum going higher, so I am expecting platinum to continue to go higher. If you notice here, platinum has been creating higher lows. So we are in an uptrend on platinum, and really been trading sideways for quite some time. But ultimately, slowly but surely, you're creating higher highs and higher lows. That's a definition of a bull market. Okay, the automobile sector is doing great, so there's no reason to suggest that platinum will create new lows anytime soon, unless you see some type of a market meltdown where the Dow Jones just plummets, which again, we'll go over the Dow Jones in a couple minutes. So platinum chart looking nice and solid. Stochastics are pointing higher, so it does look like we're going to try to test this level here on the 1480 zone and hopefully create another new high around the 1500 zone, right? Let's look at palladium now. Palladium has been really the only metal that has rallied since this February. This thing started going up because of all the issues that we've had with the Ukraine. Remember that Russia is the #1 supplier of palladium. So if we have problems with Russia, we have problems with palladium prices. And what I see here in palladium is a little bit of a wedge. I kind of see a wedge here where again, where these prices, let's delete this. So what you kind of have here is a wedge where these prices are coming into this wedge. So we would expect this to go down because again, rising wedges at the top of a bull market are usually bearish, right? So rising wedge. See, usually these wedges are bearish, and what they'll do is they'll go up, they'll squeeze, and then they'll drop back down. So again, you can see plenty of illustrations here of how these wedges usually play out. So again, I do expect a little bit of a correction here on palladium, but again, because of all the tension is in Ukraine, you never know, this thing might continue to go higher. But again, stochastics are going up a little bit, so still more room to go higher. And if we go back on time scale and we go through a weekly chart, we will see that we're probably looking to finding some resistance around here, around the 1845 level, and that's currently where we're testing, or 845 level, and 861 level will probably be the next level. So right now would probably be a good time to short palladium and try to target this level here, maybe around this $800 level. So great risk to reward trade here, where again you're selling at around 844. You got a stop loss at around 865, 870, and you're targeting 800. All right, so again, about $20 risk and about a $50, about a $45 reward. 2-to-1, great odds. I'd take that trade all day, daily, right? What else we have? Let's do some ratios now. No. Let's get to the Dow Jones first here. Let's look at the Dow Jones. Dow Jones here, the weekly chart here. I just pointed it out what a rising wedge is, right? So this is the wedge. We have another wedge here. Now, mind you, we did have a wedge back here, and this is what ended up happening, right? This was the wedge. So over here, when we broke through this wedge, and I'm talking about, let's make believe that this chart only comes down to here, right? So when we were doing this, there was another wedge, and that wedge did not come together, right? It broke down the wedge. I personally expected a move back down, or at least a 14,000, the mid 14,000, and it ended up continuing to rally. So it actually went above it went under the wedge, and it's now creating a new wedge. So I can't imagine that this Dow is going to continue to just make higher wedges and never fall. Again, wedge formations are fairly bearish in nature. And when you look at the fundamentals, when you look at the job earnings, when you look at the corporate earnings, when you look at the job reports, there's nothing reflecting new highs and new highs on a day-to-day basis. And that's what I've said consistently. I don't believe that the Dow Jones is going to continue to rally. It has, and I think I've been saying that it is not going to continue to rally since I saw this wedge. It actually proved me wrong, and it's continuing to rally. And I'll continue to say the same. It might continue to go higher, but again, without the stimulus, I just don't see how this is going to happen. So again, currently creating brand new highs. 16,911 is the current price, and again, stochastics are a little bit overbought. And one thing that I do want to mention here is that if you're looking at this chart here, let's look at the monthly chart. One thing that you'll notice here with this rally, which is a huge rally, and last major correction that we had was back in May of 2011 all the way to October. So from May of 2011 all the way to into September of 2011, all you did was fall down, and you had a 19% correction, which is very normal. But again, we haven't had a significant correction since 2011, and that's a little bit scary. Again, I think back when we were around this area here, and when I saw that other wedge, I think I mentioned that I didn't think that this thing was going to keep going. It actually, obviously it did keep going, but if you do the math from when the time the wedge happened to the time it came down, it's only gone up another 400 points. So when I said to sell here at the top of this wedge, again, here, let's say you pushed it, you kept going, you almost lost. Let's say this thing would have kept going down, right? Because the other wedge was back here, right? This was where the wedge was, right? So I was saying that this thing was going to correct to at least back down to at least around this 14.5 level. And this is what happened. You had the drop, right? You were at 16.5. And I guess this is my point. My point is you're betting how much is your risk versus reward. So from here at an all-time high, your reward is what? $500 after waiting 6 months, right? So after waiting 6 months, your reward is 400 points on the Dow Jones, and your risk was roughly 1,000 points. So over here, I'm going to say it again with this new wedge. Your risk is let's say from 16 and 9, your risk is probably 2,000 points, maybe 1,500 points. What are you going to make from here? From 16.9, what are you going to go to 17.2, 17.3? Ever since they started taking off the training wheels, this Dow Jones has been very, very, very shaky. That's it for the Dow Jones. The last one I'll do is the gold and silver ratio. So gold and silver ratio, again, still finding some resistance at around the 68 level, and really from, I would probably say from 72, from 74 to 72, 71, that's the level that the gold haters want to surpass. This is the one that we don't want to surpass, right? We don't want to go up above 73, 74. If anything, this market has been very shaky. These ratios, the lows are getting higher, but the highs are flattening out. So you had a flat over here, 59, then you moved back up, and now you're having another hard time going up above this level here, the $69 level, 69 point level percentage, right? So stochastics are falling down, so we could see a little bit another retest of 61. If the case is that we're going to see another retest of the 61 level, then you're going to see the precious metals move higher. But as of now, is only time will tell. Okay, and that's about it, guys. I think I covered everything I wanted to cover. Again, you know, I'm looking at this gold and I'm looking at this silver chart. And gold and silver seem to have very good support around this area. A nice bullish engulfing candle here on the daily chart for silver. We just tested the middle of the bullish engulfing candle. And remember what I said, usually if you're a technical trader, you want to buy in the middle of the candle. I guess so far they have bought in the middle of the candle, but I would have liked a little bit of follow through. So depending on how we end up today, I'd like to end up the day above the $19 level here. Maybe we'll test this 1930 zone here, but I'll say it again. We go up above this line here. We go up above this trend line here at around 1940, 1950. And this might be the beginning of a beautiful rally, because I'll tell you, when gold and silver start to rally, people need to get out of the way, because this thing is going to skyrocket here pretty soon. ECB, again, printing money, lowering rates, and chances are the U.S. is going to have to follow suit to keep up with all these other central bankers printing and printing and printing. Not that we're not printing, but I hope you enjoyed the video, guys. A lot of analysis there, so I hope you can take it all in. And I hope everyone has a great weekend, and we will see you again next week. Bye-bye.